Hi there. This is Ron and Cyndi Gula with another episode of the Gula Tech Cyber Fiction Show. Cyndi, how are you?
I'm doing great, Ron. How are you?
I'm doing quite well. Today, we're actually going to experiment with a different angle and check out the back of my head. There we go.
There it is.
A lot of gray,
right there.
But this angle kind of features our guest a little bit more. So, Mac, how's it going?
It's going really well. Thank you for having me.
Thanks for coming out.
Absolutely.
We're here filming in the middle of May.
Yes.
At the end of the COVID season.
Yes.
Hopefully end.
But you had to drive by a whole bunch of gas stations to get here that had no gas.
That was the oddest thing. Driving here and seeing like all the gas stations with no gas and like, thank goodness I filled up like 3 days ago.
Yeah, we're reconsidering just, buying a Tesla now and all that kind of good stuff, right?
Right after Texas where they got, frozen and all the Teslas stopped. So, I just don't think we can win. I think it's a hybrid. We still need to stay a hybrid.
And of course, the evil Russian hackers, this gang of geeks and whatnot from Russia who took out the pipeline. I got to believe there's got to be more repercussions for these people. We can't stand for something like this. So we'll see how that goes.
Hopefully.
All right. So you're here today, though, because
Yes.
we're going to talk about rare breed ventures.
Absolutely.
So we're very excited to invest in BLPs.
I'm very excited to have you.
We're going to talk about your mission, but before we talk about the mission of Rare Breed and venture capital and all things the state of Maryland and this region and whatnot, we're going to talk a little bit about you.
And your journey.
That's right. So you're McKeever. You call it Mac Conwell II.
Yes.
There's two of you.
It's 3 of us.
3 of you.
Yes.
What's that like?
It's interesting because, well, it's actually technically 4. So my name's McKeever Edward Conwell II. McKeever Conwell was my grandfather. Edward Conwell was my great-grandfather. McKeever Edward Conwell was my father. So I'm the combination of my family.
And they all were in venture capital and tech.
Absolutely not.
That's right. That's right. So I did a bunch of research here, which basically contrives, LinkedIn, going through that and doing some research. But let's talk about where you started. You were in the Morgan State T-shirt. You went to
Yes.
Morgan State. You started out in computer science. So tell us a
Yes.
little bit about that.
So growing up, I was always into engineering. I was an engineering geek, right? And so when I got to college, I thought I was going to build robots. That's what my goal was. I was going to build robots for NASA. That's what I was going to do. So I get to school and I was like, what major builds robots? They told me computer science. It was a lie. But I took my first computer science course, did really well at it. And then I looked up how much computer scientists made. And I was like, okay, this is my major. I can do this. This works. And so that was the beginning of it. Yeah.
So I guess the pie is a lie, right?
Yes.
There you go. We're gonna geek out here in a little bit. But while you were there, you were also the webmaster.
Yes. So the Office of Residence Life, so the folks who handled, so here's the thing. When I got into Morgan, I got honor scholarship, which took care of my tuition. But I still had to figure out room and board. And so the Office of Residence Life, who managed the room and board, had an old, outdated website. And so I reached out to them. I was like, hey, do you need somebody to update your website? And they were like, yeah, we really do. I was like, if you take care of my room and board, I'll take care of the website. And they're like, we'll do you one better. We'll also give you a small salary. I was like, perfect. And they gave me a computer. And so that's how I ended up getting a full
Wow.
ride.
Bartering really does work.
It does.
And it's part of your origin story. Almost everybody I know who gets into tech, who has done anything in venture, who does anything as an entrepreneur, it wasn't just being smart and doing hard work. It was making those connections. It was trying to do a little bit extra, a little get involved. So that's a great story to share. So you went right out, you graduated, and you went right into the.
I didn't graduate.
Oh, all right, all right.
Wah,
Yes,
wah,
yes,
wah.
yes, yes.
So this is where the rubber meets the road, right? So I understood the importance of doing well in college because, like, you can play around in high school, but like after college, there's nowhere else to go but the real world, right? And so I made it a point to build up my resume as much as possible. And so being the arrogant sophomore that I went to a career fair that was for graduating seniors, and I gave everybody in there my resume, said, I'm better than anybody you're going to see today. You should hire me as an intern. I go to every single booth, I give them the spiel, and I go to one booth, and this woman comes around from the booth and she's like, hey, I run the student program here. You really impress the resume. You have the right GPA. You might be a good fit for us. I was like, great. Never paid attention to who it was, what was going on, right? We had the chance to do like post-production here, right? Yes. So I asked a question. So we all have 3 lifetime obligations. Can I mention NSA or should I just say DOD? Just to
you can mention whatever you want.
I just want to make
and
sure.
So far, we're still recording, so it's all good.
I just want to make sure.
We talk about the NSA all the time.
I just want to make sure you don't have to send it to get it checked and all the good stuff. Those things happen.
We don't have to. Let's see what you do. No, I'm just kidding.
So I wasn't paying attention to what the booth was or who they were. And a couple weeks later, I get this big packet in the mail called the FS-86. And for those who don't know, that's the package you fill out for a background check to get a top secret clearance because the booth happened to be the National Security Agency. I never even considered working at a 3-letter organization like that. I never even thought about how do you get a job at a place like the NSA, right? And it just so happens that I go to this booth and the student program reached out to me, and so I got a co-op working for the NSA where every other semester I would work as a full-time employee. And so I did 2 tours. I did 2 semesters at the
I'm sure it felt like a tour. Yeah.
I did two semesters at the agency and recognized the first office I worked in was this really cool office doing a lot of stuff, working with massive amounts of data. And when I walked in, they said, look, we do Perl or Python. Which one would you like to do? Mind you, this is in 2006. Python's not a thing. I had heard of Perl. I had never heard of Python. I said, yeah, I'll do Python. So here I am, 2006, doing Python coding. And I'll never forget, I was there at the office one day. And I'm working with this guy. We're working on this project together. We're helping each other out on this code. And I stopped and stared at him. I was like, you make the equivalent $80,000 a year. And I make the equivalent 30. The only difference between us is I'm a student and you're not. But we're doing the same amount of work. In that moment, college died for me. That was like college was over for me in my head in that moment. And so the following year, I put my resume on Monster, and next thing I know, I got a job working at a company called Windermere, which later got acquired by Northrop Grumman. And so I started my career as a DBA with no database experience.
Yes, we worked with Windermere a long time ago. It's just living in Maryland, working for companies that support the National Security Agency. I'm sure we have a lot of folks that cross paths. So you did that. Mm-hmm. You sold to Northrop Grumman, but you also got some time at Booz Allen Hamilton.
Yes.
What did you do for Booz Allen?
Booz Allen was interesting because I was working on a project that was transitioning, so I looked for a new job and got this job at Booz, and they brought me in to do they had a project where they were converting some C++ code to C code to reduce the size of it. And so here I am converting C++ to C, reducing the size and doing the special project. And when I was done, I ended up just hopping from project to project, but they kept giving me projects that people didn't want. And so I ended up being getting getting known for being the fixer, right? So I did a hardware simulation project where I spun up a team to figure out how we could do hardware simulation. And then they had a project with a client that was really disgruntled and they were about to lose the contract. So they put me on just to wind it down. I ended up doing well enough that they wanted to re-up. So I won the contract back. And, clearly I'm doing really well at this point. And that was when I started to realize, one, the value of being somebody who was a jack of all trades. And also realizing the pathway of, I started to hit a ceiling on where I was going to go as an engineer. I'm still young in my career, but I'm doing these big things. And so the next pathway for me is management. There's no anywhere else to go.
I think it's another really good kind of origin story because a lot of people ask us, how do we get into cybersecurity? How do we get into tech? You can't just say I want to be a Perl programmer and stick to that the rest. You always have to be learning new things.
Oh and
we deal with this a lot. People feel I get burnt out. There's always a new tech to do. But the reality is the technology keeps moving. You got to move with it and stay ahead of it. And
that's some of the exciting part of it. It just never gets old.
Yes. It never gets old, and you're always learning new stuff. You're always challenging yourself. It's the beauty of being a software engineer, but you got to want to do it, right? Some people get into offices and they just do one thing. That's all they do. And you look up 5-6 years later, somebody new comes in with a better technology, moving faster, and you got to learn it or you get replaced.
So you talk about getting into management, but you got involved in another M word. You got involved with marketing.
Yes.
What was your experience with marketing things? Well, if you can't communicate how smart you are, you're really not that smart, right?
Well, I've always been a pretty good communicator, and I'm really good at selling myself, right? So That was always a thing. But the marketing came from the entrepreneurship space that I started to move into, right? Where my first company in 2010, me and two of my best friends decided to start a company, and all three of us are engineers. So of course we can build whatever, but somebody had to sell it. Somebody had to do like all the non-engineering things. And because I was the only person that didn't mind like talking to people on the team, that just became me. So that's how I got the CEO title. And like, okay, I gotta get good at marketing. I gotta get good at fundraising. I gotta get good at all these things that I have no clue about. But somebody's gotta do it.
So you also you were a co-founder of Given To.
Yes.
This is one of your first startups,
Yes.
right? So what was Given To?
So Given To was originally named sometimesYouForget.com, later named NoBadGift.com before we got to Given To. Clearly, me and my team were terrible at names. And what it originally was this idea of on your birthday or on holidays, it's really hard to give people something they really want, right? And so what would a world look like where you could tell people exactly what you wanted, and then people could put a portion of some amount of money towards the things you want? So you want a $400 blender for your wedding, I could put $50 towards it. I can always give what I'm comfortable giving, and you can always get what you want, right? So that was the premise behind it. Unfortunately for us, 2010, when we kind of started working on this, was around the time this industry of social gifting was becoming a thing. We had a ton of competitors out there. And one of our largest competitors ended up getting bought by Facebook, as Facebook was gearing up for Facebook gifts. And so like all these things were happening around us because of poor timing. If you look up today, like the social gifting space like doesn't exist anymore. It's just odd. Like if we had just stayed around long enough.
And that kind of set you up to go to work for Tedco and help out with their investing, right? Can you tell us a little bit about Tedco?
Yeah, so there's a few stops in there, right? So we do we run that for 4.5 years and go through 2 accelerators, did Accelerate Baltimore locally, went to New Me in San Francisco, got to do the Silicon Valley thing, and eventually we sold the IP of that company off. Started another company that didn't work out. And nobody ever talks about what happens when you have a company that fails. It's a pretty terrible experience. I basically took like a 6-month sabbatical and like disappeared from the world because like I didn't want to go to an event and have somebody ask me, so how's your startup doing? I was trying to avoid that. It ended up having what I call a gap year where I worked at a marketing firm for a little bit, which was nice because I needed a steady paycheck and also recalibrated me to reminding me why I was an entrepreneur to begin with. Like, I don't want to work a day job. And there were some unfortunate circumstances where that organization got a client I didn't believe in ethically. And so I quit without any plans. And I quit on a Friday. And the very next Monday, at the beginning of my 2 weeks, I got an email saying Tedco was hiring. And I'm like, well, that's interesting. Oddly enough, though, one, I never check my personal email at work. That's a habit from like working at the NSA. Right? So it was odd for me to check my personal email at work, but like I'm leaving in 2 weeks, whatever. And then I had known the Tedco for years, right? They do all the investing locally in Maryland. I had never seen an email from them before. So like just oddly enough, on this day, I see this email, and a mentor of mine, a gentleman by the name of Neil Davis, I knew worked there, and so I still had his phone number, so I called him. It's like, hey, Neil, I see this email from Tedco. They're hiring. You think I have a shot? Like, again, don't have a college degree, don't have a finance background, no startups. And Neil's like, they're doing some things differently. Should give it a shot. That's all I needed. He said, give it a shot. So I did. And 4 months later, they hired me. And they hired me to be on their seed investment team. And that was, my chance to break into venture capital. And I'm so grateful to them for that experience.
So just backing that up for people who are not from Maryland or familiar with Tedco, could you just kind of lay out what they do?
So Tedco, or the Maryland Technology Development Corporation, is the largest funder of early stage tech companies in the state of Maryland. They get $21 million annually off of the state's balance sheet to invest in early stage companies across 9 different funding programs. I think it's like 10 now, right? So locally, if you're raising startup capital, that's where you go. And so they're a really amazing organization. I think it's like 20 to 25 organizations like them around the country. But one thing that's very unique and distinct about TEDCO is that they have a pre-seed fund specifically for underrepresented founders. And it's the first and only one of its kind that's a state-backed pre-seed fund. And that is my claim to fame. That is the one thing I helped get stood up at TEDCO.
Yeah, that's great.
Well, it had definitely a big impact. I mean, TEDCO is an investor in a couple of our cyber companies, including Racktop, including Bandura, and there's a couple others in there too. But that was really good. Just I wanted to comment on, you kind of said you took some time off, the sabbatical, and I think the venture capital industry and the startup people, we tend to elevate the successful people, but we tend not to really be there for when folks fail. And failure is a relative thing, right? There's you can succeed and sell your company, but maybe they could have gone IPO. Maybe you raised $10 million, but maybe you had an opportunity to raise 50, right? So even on the success side, I'm still seeing people that are like, well, they could have done more. They missed this, that. And then there's a lot of things that could make you struggle that are out of your control. Oh, yeah. You might have not known that there was 5 other competitors, when you were doing Give To. And that's the kind of thing. So that it was one of the big reasons we wanted to invest in Rare Breed. So we'll talk about that a little bit. But a lot of times when we make a decision to invest in a cybersecurity startup, we want to know, do they know failure? Do they know what failure looks like so they can avoid it and not repeat those kind of mistakes? So
yes, a lot of times repeat founders, it's the repeat successful founders and not necessarily the repeat learned, tried and true founders that, again, there's reasons outside your control, but we need to celebrate those go-getters and if you're going to get back up and try it again, that's sometimes even better.
Yeah, I think so. Well, clearly, I think so.
So Rare Breed, what's the focus of Rare Breed? What are you trying to accomplish?
Yeah, so at Rare Breed, we're building a pre-seed to seed venture fund, investing primarily outside of the major tech hubs with the distinction of doing larger checks at pre-seed. So we invest outside of Silicon Valley, New York, and Massachusetts. Our target check size is $250,000. That's slightly larger than what you typically see at pre-seed by about standard for seed. The hope is over time, we'll be able to grow that to $500,000 to $1 million. And we're industry agnostic. That speaks a lot to my skill set. Working for the state of Maryland, we invested in like everything tech, and tech was super broad. And so I've been able to build up that skill set over time. So we're industry agnostic, but we don't do life sciences because I don't know how to evaluate therapeutics. Not what I do. But we have a focus on companies at the early stages who are really getting to understand and have some strong thoughts around the customer acquisition, right? You don't have to have a lot of customers, but really knowing how you get your customers. And then we like physical products, typically in consumer markets that have lacked innovation. So think a company like Rabundle out of St. Louis that makes plant-based biodegradable braiding hair. Deveneering Labs was building a really cool, innovative product in the hair space, or even Thousandfell, a company that makes recyclable sneakers, which I'm currently wearing.
Oh, wow.
Oh, you got to back up and show us those sneakers.
Yes,
come
let's
on,
see those sneakers. You can put it right up here.
Look at that. That's great. So that's
Are they
all
recyclable or they're from
recyclable.
recycled?
They're all recyclable and they're mostly plant-based.
Okay.
So the leather's made out like coconut husk.
Wow. That's awesome. That's awesome.
But you can't, are they edible?
No, not edible.
But recyclable. Very good.
Recyclable. Yeah.
That's awesome.
So could you comment a little bit on just, let's just say I've got an idea for a company and, Cyndi decides to invest in it and she's a friend of mine, wife even, but that's like I'm just getting going, right? I don't even have a customer yet. I'm just setting things up, right? Just talk what venture the typical entrepreneur does from that all the way up to raising rounds. And then what are some of the problems they have that Rare Breed's going to solve in that case? Yeah,
and generally it's called friends and family round. So yeah.
Friends and wife rounds.
Friends and wife, friends and voluntarily related people.
There you go. Meet my sister, Cyndi.
It's so for an entrepreneur getting started, you start off with the initial premise of a problem you want to solve. And then you need to validate that. So typically you want to do some customer discovery and make sure that you're solving something people really want to solve or are willing to pay for. Once you figure that out, then you have to figure out how to build something. It doesn't have to be the full thing, but something to validate that people will pay for this, right? And that's typically where entrepreneurs start to struggle, right? That's where you have to rely on friends and family to get that early capital. But if you don't have friends and family for that capital, well, then you're going to do pitch competitions, accelerators, grants, loans, whatever you got to do to get it going. And then from there, it's about how do you generate traction? And traction is like this amorphous word that means everything and nothing all at once, right? It means something different to everybody. But really what it means is, how do you show demand for what you're building? And you can show that in the form of signups, in the form of revenue and growing revenue. And once you get to the point where you can show that you have demand, and what significant demand means is something different for every investor, then you start to have the idea of, okay, I want to grow faster. And that's when the idea of going to a professional investor comes in, right? Because like, I think people misunderstand what investors and what investing is, right? They think they're getting money to build something. No, the money is a tool to grow something, right? I like to tell people that I'm a rocket fuel salesman, right? Like, you show me you got a rocket, it's going, but you want to go faster, I got fuel for you. I don't sell rocket tools. If you show me a rocket, a really cool rocket, but it's in a bunch of pieces, and all you need is that one tool to put it together, well, I can give you the tool, but I don't know if you're ever going to finish it. And if you do, I don't know if it's going to fly. And if it does fly, I don't know if anybody's going to pay to get on this, right? So I sell a tool to help you go faster, not necessarily help you build. And that's really how investing is. But for Rare Breed, what we're solving is there's this gray space in between that friends and family realm and raising, true larger rounds of capital, where there's a large pool of entrepreneurs. Some of them have traction, some of them don't. Some of them have really great products that are moving. Some of them have really great ideas in antiquated industries. And all of them are trying to figure out how to get to the next step. And so Rare Breed tries to fit into that space, right? That's core to what we do. Now, we do some stuff earlier. So every now and then we'll do pre-product, pre-revenue. Rare, but it happens. And then we have some companies that we invest in that are like gangbusters. They're doing great. We're just more dollars onto the fire, right? But that gray piece in between is kind of where we fit in the most.
How much time can an entrepreneur who's trying to show that demand signal, I'm going to say, waste going to pitch competitions and trying to pitch for investors and not being focused on the product and the customer?
So much time. Like, I've seen founders waste literally years trying to chase this money raising dream that, TechCrunch and all these other tech places like puff up, without realizing, like, one, there are founders that can raise capital really easy. They don't need the product yet and all that, but that's more core to their network and not the business. But that's not the story we tell, right? We tell like, oh, it's a great idea, that's why they got the money. No, they got the money because they knew the right people, right? But if you don't know those people, you can't follow that path. But the great equalizer for all this stuff is traction. Whether getting customers or getting revenue, that'll solve everything. Because if you're growing fast enough, nobody cares who you are, what you look like, any of that stuff. You're making a bunch of money, you can raise money, right? Like, there's a company in our portfolio called Buffalo Market. They've been growing by like 40% month over month for like the last 8 months. When they went out to raise their round, they raised it in a day. Because everybody saw like, oh, your numbers keep going up. We like numbers going up. Here's money, right? Like, if you have that, it solves everything. But founders get caught up in this idea of like, I need money to get there. Like, money helps you get there, right? But it doesn't fundamentally solve the core issue of, can you build a good business and get customers?
So along those lines, when like you've had how many pitches for Rare Breed? How many people have you gotten pitches from?
Like 1,500.
Sure. And you invested in every single one of them, right? Of course not, right? So your no rate is a lot higher than your yes rate. So what is it that you could tell a would-be entrepreneur that their pitch is no good, the way they're talking about it needs to change, they need to adapt, otherwise they're going to be on this path for a couple of years of being distressed? Hey, I can't raise money. How do you get that early so they don't waste 2-3 years trying to raise money? That's not going to happen.
Well, hopefully they were able to get a meeting with me, and I'm going to have an honest conversation with them about like, look, I appreciate what you're doing. I love the concept. I love how you're working towards this, but here's some things you need to change in your pitch. And here's where you need to take your company if you really want to raise capital. I can never tell you that you can't raise capital where you are today, because there's plenty of angel investors out here who invest for whatever reason, or you find the right person, get funding. It happens. But generally speaking, that's not what you want to look towards, optimize for, right? And so, I tell them like, look, you're too early. This is why you're too early. And these are the numbers that you want to try to move towards to at least become more attractive to investors, right? There is no, like, founders always look for like, so when it comes to traction, what's the number I need to hit? I can't give you a number, right? And then founders get upset about that, like, well, what do you want? Like, well, here's the thing. In a given quarter, on the low end, I'll see 500 companies. If I add in my team, we'll see 750. Of that, we'll invest in 0 to 6. So even if I gave you a number and you hit it, but if I see another company around the same time, they're doing double that, yeah, you did what I told you to do. It doesn't mean you're the best opportunity in that moment, right? And so you always want to be pushing for how do you become the best opportunity. And the faster you're growing, the better off you're going to be.
And one thing that I know that we look at, especially with companies that are early like that, is do they take your advice? Are they coachable? How is that interaction? And again, I think a lot of founders shoot for perfection and not good enough, and maybe don't hear what we're trying to tell them with respect to get it on the ground and get somebody buying it.
Right.
Customers are your best investments opportunities. So, I mean, again, yeah, well, how do you see coachability?
So coachability is interesting because it's really just the idea of, can we work together, right? You're not going to take every piece of advice I give you, right? It's your company. But when I give you some advice, understand, like, I've seen a bunch of companies over the last 5, 6, 10 years. I've seen a lot. I've seen companies work. I've seen far more fail. And so I'm just trying to give you advice and to get you to think about how to go about some things, right? And some of the stuff you're talking about might just be flat out wrong, right? And so being able to have that communication and work like a team becomes important, because the average investment in the United States lasts longer than the average marriage in the United States. So, like, you're getting married. We're getting married. We're tied at the hip. And so, like,
I caught that look, by the way.
just to, make sure that we can work together, and that when I say I can be supportive and helpful, I can really help. And so for us, generally speaking at Rare Breed, I'm going to know a founder for about 3 months plus before we make an investment. That's one of the advantages of investing early, right? Like, I get to know them while they're still building along. And during that time, I'm going to make introductions, right? I'm going to give some coaching. We're going to have some strategy sessions. And I'm going to get to see how we work. I'm going to get to see how you execute. And, a trick another investor taught me was, when you make those introductions for like a customer or a partner, set it up so you're on the call too. So you get to hear how the entrepreneur interacts, how they go about selling their company, how they talk about it, right? And then being able to have a debrief and see if they take in some of that information and trying to change for the next one.
Yeah, that's really important, because a lot of times when you're on a call with a customer, you're so focused on the customer, you don't think about how you looked, how you sat, even sometimes what you said. It's hard to take notes when you're talking and not listening. It's just like if you do public speaking, you might be able to give a great speech and yet still be able to improve. So that's really good. How much of these entrepreneurs that you're working with are first-time entrepreneurs, and you have to talk to them about, what the venture capital cycle's like? What are ways to manage your business? What are just even insurance and legalese things you have to do to incorporate?
Notes versus, pre-seed
stock
and
and
stock
pre-seed
and
yes.
Probably 2/3 of the companies that we've invested in so far are like that. And I have affinity for those founders because I remember what it was like to be you, right? And the other thing is, I can't teach you how to find a valuable problem to solve. Like, I can't teach that. I can teach you how to pitch. I can teach you where to get a good lawyer, where to get a good accountant, where to get, I can teach you some of the basic day-to-day stuff. The ingenuity to build a great product, the ability to recognize a problem that is really large and needs to be solved, like, I can't teach that. And so I'm looking for founders with the skills that are doing things that I can't teach. Because all the other stuff I can supplement with. And I understand a lot of VCs don't want to take the time to do that, which is where Rare Breed's going to win, right? For these founders that you don't want to take the time for, you're like, they haven't learned enough, they can come back later. Like, we can help that. We can accelerate that. It's all the other stuff.
How much of what you're looking at with the entrepreneurs are markets that are traditionally not venture capital focused? Like you've talked about like the hair products for certain communities and stuff. Like that's not something I see a lot of people, doing a lot of investing on, especially in Maryland, where it's the center of cybersecurity and medical investment, right? How do you brand these markets or even talk about that?
I talk about it so I'm a good storyteller, right? So I talk about it in the form of a story. So in like the case of Rebundle, this plant-based hair, people are like, oh, how big is that market? Like, okay. The wig and weave market in the United States is a $10 billion market. It's a big market, right? One out of every 3 women who put synthetic hair in their hair is going to have irritation and deal with other issues, right? So here's one of the first products on the market that helps alleviate that, right? And then they're like, oh, that sounds nice, but anything else? And so for that particular company, I've been tweeting about them. So anybody knows, and you follow me on Twitter, I tweet a lot, right? But from that, I gave them 5 tweets of women who were talking about horror stories they had dealing with synthetic hair. Like, not only is it a big market, not only am I telling you a bunch of women deal with this, here's some stories from actual women who are telling you they no longer wear braids because of the irritation to their scalp or having had hair loss due to this product. That makes the problem they're solving so much more human. And then you attach that to a $10 billion market that hasn't had disruption in forever. Well, it's a chance to make some money.
And solve a problem that's
Yes.
very personal and make a difference.
Yes.
So, no, that's great.
So when you have a founder or even a co-founders, how often do you look at them and go, okay, this is not CEO material. At some point, I need to start putting this on his or her horizon, maybe getting more advisors, potential CEO. Like, how do you plant those seeds early? And have you been wrong?
You plant those seeds by trying to have open, transparent conversations and asking the founder, like, do you want to be CEO? Why or why not? What would happen if there was a day where somebody asked you to step down from CEO and maybe take a different role? Would that be something you're okay with or not? And then also having conversations around, why do entrepreneurs get removed as CEOs? It's not because investors want to take over your company. Like, nobody wants to take a company from you. But what happens is the skill sets between starting a company and going from 0 to 25 employees is very different than skill set from going from 25 to 250, which is very different from going 250 to 1,000. Those are 3 very distinct skill sets. And if you do not have the skills to do all 3, then there may become a time where you as the CEO are the bottleneck that's slowing down the company. And can you ever be the reason why a company's not growing? Especially if you're taking other people's money. And like starting to have those real conversations with founders at least gets them thinking about it, right? And so then I tell founder, look, if you want to be CEO forever, that's fine. There's some places where you're lacking. If you want to do this, go fill those gaps. Go get an executive coach. I got a group of them. I can introduce you to some. Go take some business courses. Get some traditional business coaching, because getting started, you can't learn that in business school. Growing a business, they do really well at that in business school, right? And so, if that's what you want to do, you need to build those skills up. But, I have that conversation fairly often with founders, right? Because most founders aren't going to be the founder aren't going to be the CEO throughout the life of the company. Because it's just how it happens. Some founders hate to hear that. Most founders, especially the coachable ones, they start to get it, and it doesn't make them feel good, right? It's like they got to wrestle with it a little bit, but it comes. And have I been wrong? Not yet. To be determined.
That's good. That's
we'll
good.
see. We'll see.
I have a term that I like to say, and it is the journey of the entrepreneur, because some entrepreneurs are in your face, can get out there, want to speak, and then there's some more like me, which I call silent entrepreneurs, we like to be in the background. We like just to make sure, we'll take that jump. We'll make everything solid and great. But, we're not seeking the spotlight, and we're not seeking those, front conversations. But there's so many silent entrepreneurs that start as a founder, co-founder, and I find them more coachable. But at the same time, when you're trying to get those people out, and I'm speaking mostly for women and minorities and other people who don't see themselves in that position, how do you encourage and to mentor to say, I know you don't think that you can step into that role, but you can?
It takes time, right? It's not going to happen overnight. And some of it's just, they may just be an introverted personality, and that's okay. And sometimes, and a lot of times, it's just lack of confidence, lack of knowing that they can be, or what happens when people see me. Am I really doing, like, not even understanding how much they've already done. They're like, well, I'm still building this business. I haven't done anything yet. And like, well, somebody else who's done less than you just raised 45 million. Like, you probably have done more than you think, right? And so, and also putting them, like, giving them gentle pushes, right? So like, again, if I tweet about one of my companies, a bunch of people are going to see it. And now they have to deal with like, all these people are reaching out to me and want to talk to me. It's like, well, it's a good thing. Or, I'll send a reporter something about something one of my companies did, and like, hey, Mac, this reporter reached out to me. Like, hey, you should do that. It's okay. Or very recently, an entrepreneur who I haven't invested in, but who I've been mentoring, the group All Raise reached out to me. It's a group to support women entrepreneurs and women executives, and they asked me to do a fireside chat. And so this entrepreneur I've been supporting is a woman. Like, well, can she be the moderator? Let me do a fireside chat with the entrepreneur. One, because me and her have a relationship where I've been mentoring her and helping her. So like, this is a chance for her to have a conversation with me, but also gets to put her on the stage at an All Raise event. It helps elevate her profile, even if she was not looking for that, right? So giving them gentle pushes along the way to help put them in positions where their profile starts to grow. And then one day they can look back and be like, oh yeah, over the last few months, I've done a couple speaking engagements. I've done some podcasts. I wrote a blog. The world didn't burn down around me. Like, I'm still me. Like, oh, this isn't that bad. And so, help and encourage that way.
No, that's great. I completely agree. Some of us more than others need a kick in the pants.
Me?
No,
Me?
yeah, Ron's a good kicker.
We'll leave that in. We're not
I know,
gonna edit
I
that
know.
out.
That one you could edit it out.
One of the issues that we like to talk about with venture is that this is a great way to build communities.
Mm-hmm.
It's not all about the next, white male CEO. And even if you do have a company that's a white male CEO, a modern company today is fairly diverse. So one of the things you do with a successful company, you end up creating some wealth. The founding team usually does pretty well. Their immediate reports do pretty well. So with your entrepreneurs, when you're starting to plan for success,
Mm-hmm.
do you do financial planning with them? Do you say, hey, look, do you think about a charity? Do you think about giving to your church? Do you think about how your number 3 person at the company is going to be compensated if Google, buys you tomorrow?
So it's interesting in that I haven't had enough companies get far enough along for them to have that conversation yet, right? I did have one recently that I worked with before I left Tedco. And I actually met with the founder like last week. And we started talking about like, okay, you went from being a struggling college student to being a millionaire, right? You like investing in EFTs, but like, think about, get yourself a good tax attorney. Think about ways to protect your money. And then think about putting together an investment portfolio and what that looks like. Stocks, alternatives, crypto, maybe some venture. And we just had a conversation about how to think about money. And then I gave him the name of a few tax attorneys to talk to. Because if you've never been around money, you don't come from money, you don't know how any of this stuff works. You don't know how to give back or when to give back or what the tax implications are. Or you just got a bunch of money and you put some in Bitcoin and all of a sudden it jumped up and like, you want to take it out, but like, what are the ramifications to that? And so, I'm now starting to think more about what that looks like. Because, we play so early, like my founders aren't thinking about that. Like, they got years, but when they get there, it's so easy to mess that up. It's so easy to get overzealous about the money you have. and one of the things I have taught to my entrepreneurs is get to know entrepreneurs that are a few stages ahead of you, so you get to see how they deal with it, right? And have conversations with some of your angel investors, right? Because your angel investors are typically independently wealthy folks who have money, who can talk to you about what they did, how they became angel investors, right? Always look for those experiences.
I think one of the things that is missed as well is early intervention. Things that you do early can make such a difference later on when you're successful. We were lucky enough to have people interject pretty early in our journey to say, hey, you know what, if this really takes off, maybe you should consider this. And that's just been so eye-opening. So that's one thing that we definitely like to do, and make sure we have that conversation and that founders are thinking about that, and early on employees. I mean, it's not just about the founders and everything. So it's very important.
I think it's all about planning for success. You might not predict the day that Google buys you for $1 billion, but you got to prepare for it.
Yeah.
And we kind of break it down in 3 things. If it's not the deal you want, if you do good tax planning, it still might be the check that you want. The second thing is, if you're not planning for your own taxes, how can you help your employees?
Yeah.
Plan for that. And then third, man, you're more than your company. If you got to think about what you're doing next, and you can't be working at this company forever. And that usually puts founders in, different spots. All right. So my last rare breed kind of question for you, and we can talk more about it too if you want. You mentioned a comment. I forget if it was in your treatises, which I'll put in the show notes, or you comment. But you said you accept every cold LinkedIn and Twitter outreach. I try to practice this too, but I want to hear, how do you manage that?
I'll accept everyone. I accept cold outreach and DMs. I can't get to them all, but I try to get to as many as I can. And it's tough, right? I have a lot of people reach out to me, but it's important because this industry is so network heavy that if you come from a background where you don't have a network, like you just never get to anybody, right? And it took me 2 years to learn that. And it took me like another year to get into some networks, right? And so, giving entrepreneurs the ability to reach out to me. And, in our portfolio, I think we have 4 companies that cold reach out to me. And so that is important. Now, unfortunately, I can't get to them all. There's only so many hours in a day, right? I try to reply to as many people as I can. But I also have to be conscious and give myself the room to be okay to, like, I can't get to everything. But I try to get to a lot. And in lieu of that, I also do like very impromptu clubhouses or Zooms or Twitter spaces where I just let entrepreneurs ask me questions, get a chance to talk to me. And those can be really helpful for getting founders across. It can be really helpful to get a lot of founders at one time to hear me speak, to give advice, and to also better know how to reach out to me as well, right? Like, just because you cold reach out to me doesn't mean I'm going to take it, right? Doesn't mean I'm going to be interested. But if you want to know how to do so, send me a DM or email. And when you do, give me a short description about what you do. And then start talking to me about your key metrics, right? How fast are you growing? What's your revenue like? What are those key metrics that drive your bottom line, right? And that'll give me a quick sense of if I'm interested or not. And if I am, you'll get a link to my calendar.
How do you feel when people say, hey, can I just pick your brain for a while?
Those can be annoying because I don't know what the meeting is, right? Do you want to learn about entrepreneurship? Do you want to learn how to rate? Like ask me a real thoughtful question is helpful. But I take some of those too, right? Just because you never know. Like, I can't be a person just says no to something that just says no to something flat out because it's annoying or I think it's going to be a waste of time, because every now and then you take one of those meetings and you're blown away by somebody. And you just realize they just didn't have the words to ask the right question.
That's well said. So, Rare Breed, where are you at right now, May 2021?
May 2021, we've the goal is to raise 10. We've closed on 4.7 to date. We've made 15 investments. And, we're fundraising. We'll probably be fundraising until the end of the year. Minimum check size is $25K, which you can pay over 2 years. We're a 506c fund, so we can publicly solicit, so nobody reach out to me. I've spoken with the SEC already. I'm good. Don't worry. but we're picking up momentum. Things are going well. We should be over the 5 million mark before the end of the month, and I'm really excited. The biggest issue we have right now is I got really good deal flow. Like I have so many amazing companies that I'm meeting these days, and you just can't invest in them all. Like I hate it when I have to send an email to a founder. It's like, hey, we love you. We really love you. We just don't have the money. It's like a heartbreaking thing. Or what's been really interesting is in the market today, deals are moving so fast, and companies are raising so quickly that 6 of the companies in our portfolio are raising follow-on funding already.
Yeah.
I'm like trying to plan for that and trying to figure out like who can we put follow-on check for, who should we do an SPV for, and figure out some money. But good problems to have.
Yeah. And what are you thinking of the valuations that are out there right now?
Well, luckily, not investing in Silicon Valley allows us to get into some companies with some really, reasonable valuations. But I mean, we have one company we invest in, Matrix. 19-year-old guy. He's part of the Gen Z mafia. Like he was in like this big article about the Gen Z mafia, right? And we got into his company originally. The first round, we were the only institution because he was only taking money from angels. It was a $3 million cap, right? He's now raising a $25 million cap.
Wow.
Less than a year later. And it's like, well, this company, I get it. I'm just like, oh, like.
Well, what does the company do?
Oh, so basically, Matrix is, you can think of it as like Robinhood for esports. So the idea to invest into your favorite esports teams. So, turning esports teams into alternative assets, esports teams and esports gamers into like these alternative assets. So being able to invest in your favorite teams. A really cool concept. It's a crypto company. So this is the first company we have say, yeah, we're going to distribute our equity in the form of coins. We're going to do a drop. And I'm just like, okay, something new for me to figure out.
Talk about need to learn, constantly learn, right?
Constantly learning. Like, thank goodness I'm okay with this. Talk to my lawyer like, hey, this is okay. But
so you've done plant-based companies.
Mm-hmm.
You've done, I consider that like IT tech crypto type companies. You're not really doing medical. What are some other areas that you're doing?
So we're actually looking at a medical device company out of Arizona right now. A company that makes a portable ultrasound for a quarter of the price, and is really a company going towards maternal health. So interested in that. But I don't think about it in terms of like sectors, right? And the thing that I talk to my team about is we want to focus on companies that are focused on customer acquisition, experience, and retention. Right? If you can do those 3 things well, you have a chance to be a good company, right? And by focusing on those 3 things, I never mention the industry or sector, right? And that's how we get to be the company that doesn't miss out on the next Spanx, right? Like, I don't understand women's undergarment. It's the next generation girdle. Okay, I don't know what that means, but you can show me that. Yeah, you know how to find customers. A lot of women are buying these, and they keep coming back and buying more. Well, it sounds like you got a good business, right? It's like trying to figure out the ways we can strip out our biases is really big for me, because like I had to recognize I had biases, right? Like even as underrepresented founder and such, like I'm a black man, so there's certain things that I have affinity for and things I don't. But the things I don't have affinity for or don't know doesn't mean those are bad businesses or bad industries.
So you're saying women's undergarments of the future?
Yes.
Good.
Absolutely.
Good. What when you look at something like a Shark Tank, well, one, have you ever had a Shark Tank company come to raise money from you?
I have.
Yeah. So what's that like?
It's weird because I have to explain to people that Shark Tank is a very different kind of investing, right? Those are angel investors. They're investing out of their own personal money, and they're just making up any kind of deal that they want. Like in venture, we do very specific types of deals. And so, meeting with those companies, the ones who are still early on, who are still trying to figure it out, and they think that investing in Shark Tank, like you just have to have the conversation like, no, it's a TV show. This is real fundraising, right? Versus the ones that have actually raised money from those folks. Then you have to look at the deal like, well, the deal you signed is really prohibitive for the type of funding we want to give you, right? And so like, now you got to have conversations about things like refreshing cap tables, right? Like those can become really difficult and hard conversations. That's something I'm worried about. Honestly, somebody who invests as early as I do, like I know there's going to come a day I'm gonna get an email from some major fund. It's like, hey, by the way, Mac, I know you own 5% of this company, but you're going to own 3% now because we're going to take that from you. And me having to be like, yes, okay.
Yeah, a lot of times we go through that quite a bit. I mean, you own 3% of a company that's worth 5 times as much, but you own less. Sometimes founders have a hard time, with that. We tried to kind of recreate a Shark Tank event for cyber. We were going to do something called CyberQuest, and we were going to have a bunch of our friends, some from industry, folks like Justin Label from Interloop, literally pick like the top 5 or 6 companies. They were going to come in and pitch. We were going to vote on it, and then we were literally going to like grant like $250,000, at this show. But to try to capture that 30 minutes of intensity that Shark Tank has during a 4-hour event, it's not actually good production. And so we kind of switched to doing this on a more philanthropic side.
Well, yeah,
Yeah.
and this was March 2020, so
COVID put a damper on
yeah.
it.
So I mean, it wasn't just all. Oh, we decided it was a bad idea. I think the pandemic decided it was not going to happen, and so we did refocus on more on the nonprofit side and doing similar things that way.
So with COVID, how has COVID changed like your meeting schedule, your meeting rates,
deal flow?
So from June 2020 to September 2020, I had over 1,100 meetings. And that was just because everybody was at home. It didn't matter where you were. And I could schedule 20 to 25 meetings a day, back to back. I don't know if I'm able to raise this fund without that, right? Everybody's home. Everybody's in front of their computer. Didn't matter where you were in the world. I've talked to people all over the globe. It's always weird when I'm like on the phone with somebody in like Singapore and they're like, yeah, we're 12 hours ahead. It's 11 o'clock at night. Like, why are we having this meeting? But during COVID, not having to travel, not having to spend the money to travel, was a blessing in disguise, honestly. And now that we're starting to come out of it and I'm starting to have like in-person meetings, I have to recalibrate myself in my schedule. Like, oh yeah, I need to put in lead time for travel. And like, am I going to take this call while I'm driving or not? Like I used to do that all the time. And I get used to that again. But it's different because like now I'm used to being at home in front of my computer. As I'm in the meeting, I'm in my CRM taking down notes. Can't do that when you're in the car going about things. So been trying to figure it out. But it's been interesting, right? And I think because of it, our firm will always be virtual. My venture partner is in Palo Alto. My another investor on the team, he's in North Carolina. I got fellows all across the globe. I got one fellow in Canada, right? And so, yeah.
That's phenomenal. So Gula Tech Cyber Fiction, you're obviously really into tech.
Yes.
And I find a lot of people who are really into tech are really into tech from the future. So science fiction, movies, yes. What kind of stuff are you into?
So I'm a huge manga fan. So if you're into anime and Japanese cartoons, I read the comic versions and the long novel versions of them as well. But growing up for me, one of the first animes I ever fell in love with was a show called Robotech. And when like the first episode, there's these 2 fighter pilots who are flying these jet fighters that turn into robots. They're based off of the F-14 Tomcat, which is an actual naval plane with wings that sweep back when it reaches higher speeds. It's like the coolest thing ever. That's like, and like in that moment, that's where the idea of like I'm gonna create fighter planes and I'm gonna create robots one day. I was like 6, and that got me here. Who knew?
That's awesome. Was that a gateway into like Spaceship Yamamoto and G-Force and that stuff like that? Yeah. Transformers, of course. That's
everybody loves Transformers.
Yeah. Now then, how do you extrapolate that to today? Do you watch the comic book shows? Do you watch the superhero shows? Do you watch
100%? I am nothing more than a big geek. Like I love this stuff. Like, whenever like Comic Cons come up and stuff, like I still have all my collectible cards and things. Like I don't get to do it as much as I used to, but like I love all this stuff.
Does any of the science fiction that you watch inspire stuff in companies that you invest in?
Not yet, but I'm looking towards in there, and there's actually a whole genre of comics around this idea of virtual reality games and fully immersive games. And like, yeah, they're entertaining comics, but like somebody figures that out. That's going to be something, right? And so like looking at companies, we talk about the metaverse. Like the metaverse is like the big term right now. People are talking about these virtual reality avatars that are photogenically, you know, closer to who you are. That's only 2 steps away from what I'm looking at in these comics. I'm like, who's going to be the company that does that? How do we find that?
Yeah, we got self-driving cars. We don't have flying cars. And if you remember the Jetsons,
Yes.
you know, they would get up in the morning, they're not ready, and they would put this avatar on and talk to the office. So we have fake Zoom backgrounds, but we don't have fake Zoom avatars yet.
Not
Right?
yet.
That's coming.
But Zoom added an effect now to touch up your appearance.
Oh yeah, that's been there for a while. Some of us found it sooner than others. But also, I mean, like Snow Crash. If I don't know if you've read that or Ready Player One. I mean, we're definitely predicting the future
Yes.
from the past, and it's odd and eerie how close they're getting to being correct. Is there anything out there that you hope either does or doesn't come to fruition?
So I think one of the first books where the term robot is seen is a book called RUR. I think it's like an old Russian book. It's from 1930s. And we had to read it my freshman year of school because it talks about an island where these robots take over and kill everybody. This is like the first time this is talked about. This is 1930. Like computers aren't a thing. Internet doesn't, like, we barely have electricity that works well, right? That stuff is scary because we see the power of automation, right? We see the power of robotics. Somebody's going to build something that does this and does it in a really scary way. And so, you know, we've seen the iRobot, like, that ain't far. Like, you got drones that can shoot guns. You take a drone that can shoot a gun and give it some artificial intelligence that's like basically like, here's a list of criminals. Go find them. Well, if there's something off with the algorithm or the facial recognition, you just got a rogue robot out here, right? Like the technology to build something like that exists today.
So one thing I'm actually really happy about is we're finally having this social discussion about technology. It used to be that you could just do whatever you want and invent whatever tech you want. Now, a simple thing like putting body cams on police officers is like a hotly debated, you know, issue because there's a lot of issues with social norms and race and privacy. Same thing with social media. Same thing with these AI algorithms, right? If you target, here's my ideal candidate for a criminal, and somebody taints that one way or the other. How can you even know? So I'm happy that the public's engaged with these kind of conversations right now.
I am too, but I think the issue is when the public engages in these conversations, we're engaging purely from the social standpoint, and we don't think about the financial standpoint. So like, take police with body cams. That's an issue I care about deeply, right? But at the same time, I recognize you got to save all that information somewhere. That costs money, right? You got to have backup files. That costs money. You got to have the equipment. You got to replace the equipment. You got to update the equipment. That costs money. And so like, there's this give and take of like, okay, socially it's the right thing to do. Where you find the money for it?
Yeah, and maybe body cam's not the right answer. Maybe a drone that's following the, you know, there's all these, what about the airplane? We used to have an airplane over Baltimore that was photographing everything all the time. It's really interesting that there's all these new ways to approach this. I mean, London, they have a camera on every street corner, and they don't do the body cam thing. So it's just different ways society can approach that, which is kind of cool.
But you also got to care about privacy too.
Yep.
Right. Just because we can doesn't mean we should.
Yes.
And that's the conversation that people are getting half of the conversation. They're having the half part of the benefit. And we'll just get money somewhere, you know, or we'll just figure that out later. And we are not having the full conversation like we should.
Yeah, I agree.
So the science fiction I generally put in 2 categories, right? The dystopian futures, right? The Blade Runners, you know, oh my God, things are going to get so bad, right? And then the oh my God, things are so great, you know. And then
Star
there's
Trek.
Star Treks, and then you got shows in the middle, kind of like Westworld,
Mhm.
you know, where they kind of show you it's a bright, shiny future, but there's some amazingly exploitive things going on against society. What do you think of the superhero genres where they have like a more realistic superhero stuff like The Boys? Have you seen The Boys?
I am a fan of The Boys, and it's like the thing I used to think about as a kid, right? So like as a kid, I used to love Power Rangers. But as a teenager, I was like, what happens to all these buildings they keep blowing up and breaking down? Like, are there people in them? Like, what happens to the construction to get that rebuilt? There's a lot that goes on with that, right? And so, like, you know, when you think about it, yeah, superheroes would be cool, but the unintended consequences of the damage provided, like, what does that mean?
The if you like The Boys, also on Amazon is Invincible. We just watched the first season, so it's out fairly recently, so I'm not going to spoil it too much, but it's very similar to The Boys. It is animated. Have you seen it?
I've seen I've like scrolled past it. It's on my watch list.
Definitely watch.
So
it's got a
gotta
lot of
watch
that. What happens if that building collapses when the superheroes are fighting?
Yeah.
It's pretty cool. And it's really sad because I mean we just saw some of the footage in Israel of the rocket attacks from Hamas, and it looks like a movie. It looks like something out of a Marvel movie. I mean, it's just insane. So it's I hate to see the violence like that, but it's definitely interesting. So I think perhaps a better note we can finish.
Yeah, I was
on.
going to say,
There we go.
let's bring this somewhere else.
So I'll give you a second or two to think of this, but if you were to look into the camera
Uh-huh.
and say something inspiring to a would-be entrepreneur, somebody who's on the fence, maybe they've been working in the government, maybe they've got a family, they don't want to take that risk. What can you tell that entrepreneur to kind of tip them over the edge to get them to take some risk and try starting a company?
It is never the right time to start a company, and it is never the wrong time to start a company. You have to do that burning desire in you, or else you're never going to feel right. It's not going to be easy. It's not going to be fun. But entrepreneurship's not about enjoyment. It's about fulfillment. And if you truly want to be fulfilled by this burning desire you have, then go do it. And don't let anybody else stop you. And know that if you don't make it to where you want to get to, it doesn't make you a failure. It doesn't make you a bad person. It means you went through another experience in life and you've done something that most people will never do.
Hey, I think that's phenomenal.
Yeah, but it can be fun. It is fun too. So yes.
On the other end.
There's tough parts to it. However, you can certainly have fun. I mean, my goodness, being able to work for yourself, see something you're building grow, have it just, you know, other people join you.
That all sound like fulfillment. I didn't hear fun yet.
Yeah,
Oh no,
I
but
hear
it's
you.
but it was, I don't know. I just really enjoyed it. I
Yes.
mean, I had a great business and life partner to help through that too. But it
That's
does
amazing.
having somebody go through it with you is very important. Co-founders,
Yes.
other people, make sure you have your support structure. Definitely.
I think it's really well said how you closed out there. So with that, I would like to thank Mac for coming on the show.
Thank you for having me. It was fun.
What's the Rare Breed website?
So go to rarebreed.vc. It's where you can find us, or find me on Twitter. It's Mac Conwell. So MacConwell. Find me on Twitter, and happy to chat with anybody.
Phenomenal. Alrighty, that's Ron and Cyndi Gula with another episode of Gula Tech Cyber Fiction.
See ya.